In this video, guys, we're going to look at CFDs versus shares. Stay tuned. Hey guys, warm welcome to you. Thank you for tuning in. Don't forget to check out our channel sponsor in the description below. And while you're down there, if you haven't yet, consider subscribing for loads more videos about trading, mindset, strategy, CFDs, futures, contracts, spread bet, the lot. This is the place to be if you like the markets. All right, so let's have a look at CFDs versus shares. So CFD is a contract for difference. It's literally a contract between you and me to pay the difference between the asset we're trading underlying. So if I go long on, let's say I go long on BMW, okay, that means that I think the market's going to go up. I think BMW is going to go up. If at the end, when I want to close the position, it has gone up, you pay me the difference. If it's gone down, I pay you the difference, and vice versa for sure, which we'll talk about in a moment. It literally is that. It's a contract between two entities, if you like, to pay the difference. Hence, contract for difference. Whereas a share, an underlying share, is you're buying a chunk of the business. That's it. You legally own a little chunk of the business. And one thing I haven't put in here, which maybe isn't relevant for many people, is that you don't get any voting rights with CFDs because you don't actually own the underlying shares. Dividends, you do still get. You get a portion of the dividend with the CFD, and you have to pay the dividend out if you're going short. But let's just keep it simple for now. Let's look at some of the basic things that might influence your decision whether to buy shares or CFDs, or what I think are the most important decisions anyway. The big one for active traders is there's no stamp duty to pay on CFDs, especially if you're trading UK shares. UK shares attract what's called a stamp duty of 0.5% at the time of filming, which means that as you're buying any share, you have to pay 0.5% tax, if you like, just to buy that share. Now, that is pretty unfriendly if you're an active trader. You know, whatever kind of level you're at, you can just avoid that completely by trading a CFD. Now, it doesn't affect the tax as in the capital gains or all that kind of stuff, but it just affects when you're buying the actual underlying asset. You don't pay your stamp duty for buying a CFD. Now, the other good thing, handy thing that I think is with your trading CFDs, a single currency account versus different accounts required for different shares. So let's say you want to buy something that's denominated in GBP in the FTSE 100, and let's say you want to buy some shares in the DAX, or let's say you want to buy some shares on the New York Stock Exchange, for example. You would need a US dollar account, share account. You would then need a euro account. You need a GBP account. There might be one broker that allows it, but it's quite complicated and it's a bit grubby to do it, for want of a better word. Whereas CFD providers, most of them will allow you to have one single account, and you can sometimes speculate on that CFD in your underlying currency. But even if you can't, the fact that it then converts back to you and keeps things all nice and clean and allows you to use the margin and bits and pieces we'll get to in a moment, just makes it a little bit better, so you've got a bit more of a global regional stock with your local market. Because let's be honest, guys, there's so many opportunities out there that it pays to be able to strike on opportunities somewhere else. And one thing as well, and we're comparing it to shares here, but if you do have a CFD account, of course, then you can speculate on the underlying index. So you want to speculate on the DAX or the Dow or FTSE 100 or NASDAQ or crude oil or gold, you can do that within that same account. Whereas if you want to do that, if you've got a share account, you have to go and open a separate account, a futures contract account or something else. You can't speculate on those via shares unless you're using an ETF, I suppose, but you can't really. Okay, the other thing on CFDs is the margin leverage. You don't get any margin with shares. You buy £10,000 worth of shares, you need £10,000. You margin or leverage, if you like, with CFDs means you don't have to put up £10,000. If you're buying £10,000 worth of shares, depending on the margin requirements, it varies from broker to broker, country to country. Some new regulations have come in place that have restricted this a bit. But for example, you might only have to put up £2,500 of that as underlying margin. So you allows you to kind of be a little bit more aggressive. So let's say you have got £10,000 to trade with, rather than just buying one £10,000 batch of shares, you can buy 40,000 if you use that same margin of 25% as an example of worth of shares for the same 10,000, or you could split your portfolio a bit. You could say, well, I quite like some BP, I quite like some Volkswagen, I quite like some Microsoft, I quite like some Apple, whatever it may be, and you can split it with that same amount of money, so you can put the money to work a little bit better. Of course, double-edged sword, because you lose money, you're going to lose more, obviously. But if you're used prudently, it's a very handy tool to have. The other thing is short and long. So generally with shares, for most retail buyers of shares, this doesn't always apply to professionals because we can still do this. But for most people who are opening a standard share account with your bank, with an online broker, you can only buy. So you can only go long. In other words, you can only make profit when the market goes up or that share goes up. Now CFDs, very easily you can do that, mirror that. It's called going long, or you can go short, which basically means that you can speculate on that share price going lower. And it's super simple. It's just literally a case of opening a short by selling when you don't own it on your order ticket. You open your order ticket. It depends obviously on the broker you're using and the platform you're using. And don't forget to check out our preferred channel sponsored broker in the link description below. There's a link in the description below, should I say. But literally you have nothing, you sell, you're now opening a short position. You have nothing, you long, you open up a long position. That's as simple as it is. It's very easy to speculate on the downside as it is to speculate on the upside. One of the biggest advantages of trading CFDs bar none. Now, if you're in a bull market, you might not care, but if you're in a bear market, maybe you want to take a few shorts. Maybe you think the banks are overbought. Maybe you think the miners are due a bit of a hammering. Maybe you think there's a vulnerable retailer you want to press a short on. Then you can do that very easily with a CFD. And the final thing is the mark to market. So with a CFD account, generally speaking, and this is generalizing because I don't think many share companies allow you to do this. Some may do, but generally speaking, get a mark to market. So in other words, as the profit is going in your favor, you can use that profit then to speculate again if you need to, use it as margin. So let's say the CFD you buy doubles. Instead of having to close it to take the money, you can still withdraw that money, or you can use it to speculate on something else. Now with a share, you can't do that. Let's say the share doubles and it goes up to 20,000. You can't use that money, you can't take out that money. You still have to leave it in there. So it's a little bit more flexibility. Now, of course, if the share price goes down again back to where it was, you'd have to put the money back in to cover the value. So it's not just free money, but it allows you to put your money to work. Say you've got a portfolio that's rose very nicely over a 3-month period, then maybe you want to take that money out to do something, take some of those profits out, but still hold the positions. Maybe you want to roll that into some other kind of positions, or whatever the case may be. So you've got that flexibility there, which you don't have with shares. All right, guys, that's a brief guide to CFDs versus shares. Like I say, if you like this kind of stuff, then obviously a thumbs up is appreciated. And of course, subscription if you think you're going to find value from more videos like this later on. Take care. Bye-bye.